Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on MishTalk.com. Welcome back to the show, Mike.
Pleasure to be back on the show.
And, of course, we've got two big holidays, Canada Day on the 1st, July 4th. Do we have real reasons to celebrate when it comes to our economies right now?
Is there reason to celebrate anything, or maybe we should be celebrating everything? Certainly the stock market goes up, and if you're a shareholder in stocks, you can just you're probably grinning and probably celebrating. If you don't have stocks, then you probably don't have a lot to be celebrating here, Jim.
Janet Yellen made one of the most incredible statements I've ever heard in my life, if this is correct. She says, we will not have an economic crisis, likely, in our lifetime. What's our lifetime?
And there's a lot of buzz going on over that. First off, what did she mean? Who is our lifetimes? I heard analysis from, was it Reuters, I think, that said change the words to, like, in my lifetime, as if she was speaking about herself. It doesn't really fit in, though, with the rest of what she said. So if she wasn't talking about herself, then who is the R? Who is our lifetime? Who is she talking about? Certainly unclear. And what's interesting about this is the Fed governor from Minnesota last November came out and said, well, there's another crisis is 67% likely. Now, the weird thing is he used the term, in the next decade. Like, is this even news? Sometime in this decade. Is this even news, Jim, that in the next 80 years or so we're going to have another crisis? So neither of these things said anything, actually, if you look at the actual statements, because the time frames and the words are confusing. But I look at it as a big contrarian indicator from Yellen. It reminds me exactly of what Bernanke said the year before everything bust. He actually came out and said there is no housing bubble. There won't be a housing bubble bust because there is no housing bubble. And then when it did bust, he came out and said subprime is contained. Well, it wasn't contained. Central banks have an amazing record to say and do the wrong things, to believe the wrong things, exactly at turning points. In 2000, Alan Greenspan was actually worried about runaway inflation. He thought here he was several years earlier warning about the overexuberance in the stock market. When 2000 came, he was a firm believer in all this technology was going to, lead the way forward. It was never going to stop growing, and that valuations made sense. He became a cheerleader worried about inflation literally 1 month before recession started. It's right in the Fed minutes.
Well, central bankers, ever since central banks were created, keep telling us, because of us, we'll never have another crash. And I think we've had, 23 recessions since central banking started?
Yeah, I don't have a count on that. But that sounds about right. But what they've done is they've actually delayed the length of time between them. They've stretched them out, but they've increased the amplitude of them recently. The dot-com bubble was enormous. The housing bubble was even bigger, and the everything bubble, as I call it, is even bigger than the housing bubble. So right on cue, Janet Yellen comes out and says, oh, that's another thing she said, was that by some measures stocks might be overvalued, but it's not at all clear. Please, it's not clear. So the amazing statements right here, I believe, are huge contrarian indicators.
Well, isn't one of the very worst things you can ever hear from an investment advisor is, this time it's different?
Well, she didn't say that, but yeah, those are the arguments that are going out there. Why is it different this time? Oh, because the Fed has our back, because interest rates are low, because stocks are cheap to bonds, because carrots are cheap compared to the price of moon rocks. I mean, that's pretty much what it's gotten down to. Not that any of these comparisons have to make any sense. And just because stocks are cheap to bonds or carrots are cheap to moon rocks doesn't necessarily mean that either carrots are cheap or moon rocks are expensive or bonds or stocks. As these are meaningless statements, is what I'm trying to say. And but these are the kinds of justifications that fall into the category of this time it's different. The terminologies are just a little bit too. The wording is just different, but it all boils down to the same thing. Reasons for finding an excuse to invest in overvalued markets. But hey, guess what, Jim? It's worked. It's worked for several years here now. So how long can it keep on going? I don't know. Nor does anyone else.
Well, has the goal of creating more jobs actually happened with an increase in the stock market?
I don't believe so. I think it would have happened anyway. What the Fed has done is blown another bubble, and when asset bubbles burst, it's going to hurt a lot. This idea that we need 2% inflation and trying to get 2% inflation at a time when consumers are clearly still strapped in debt and deleveraging, and millennials are unable to afford a home because the Fed has reblown the housing bubble, something I didn't think would actually happen, but they did. And so then they're wondering why housing formation is so low. Well, you've got trillions of dollars worth of student debt. You've got millennials with aging parents needing to take care of them. And they're wondering why these people, young people, aren't buying homes. And on top of all of it, their attitudes towards financial things is a lot different than that of their parents. They saw their parents go through a housing bubble, perhaps lose their home, perhaps get divorced over finances or losing their home, arguing over money, arguing over debt, worried about money, worried about debt, all of those things. Their attitudes of millennials is a lot different than the attitudes of their parents. The environment that they grew up in is different. What they expect and want out of life is a lot different than their parents. And people are still trying to figure out why millennials aren't buying homes. It's crazy.
We'll have more with Mish Shedlock right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604 404-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Mike Shedlock. Mish, going back to the Millennials, a different headset, as you said, and one of those as well, what drives the North American economy a lot is automobiles. They don't have this obsession with getting the hottest set of wheels they could find like maybe you and I did back in our 20s.
No, they don't. And that's what's puzzling me here is why auto sales kept going for as long as they did. But the headwinds now are absolutely enormous. First off, people are going more and more underwater on loans. And we're even going into 5- and 7-year loans on used cars. Every trade-in, because used car prices are collapsing, is underwater. And who can afford a new car now? Whether they have a trade-in, can millennials afford to go out and plop $40,000 for an SUV? You don't have to spend $40,000, but a lot of the millennials can't even afford, a much more modest sedan, and insurance on top of it, and all of that. A lot of them ride share or use Uber or Lyft or these places. I'm just looking ahead at the headwinds here, especially for people who live in cities, and people of my age, the baby boomer generation, aging, don't like to drive at night because they don't see as well. The demand for self-driving and Uber-like things is coming, and residual values of cars is shrinking. And even outside that, self-driving vehicles are going to change maybe, 2-car or 3-car suburban households into 2-car or 1-car from 3 and 2. So there's a lot of headwinds here on this stuff. Plus, at some point, when this automated technology is added to cars, people are the residual values of cars that don't have it is going to plunge. And so these headwinds here are absolutely enormous. Auto inventories are stacking up. I don't got it. The report that came out today shows that inventories of cars is rising right as sales are sinking. So even if we see a GDP boost from inventories this quarter, it's going to snap back next quarter. My assessment is still around 1%. The GDP now is around 3%, but nowcast is under 2 at 1.8, I believe. So we'll see, but they're already talking 1.5 for third quarter. So this alleged second quarter boost is going to be minuscule if it comes at all. And the third quarter, we're looking at sub 2 again. So this is an economy not operating on 4 cylinders, to say the least, and the Fed's hiking right into it.
We'll have more with Mike Shedlock right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Shedlock. Mish, would a return to Glass-Steagall make any difference to the banking system, or is it just so corrupt nothing's going to help?
It never caused a problem to begin with. I'm in favor of it. It did not cause the Great Recession as many people think it did. Glass-Steagall is separation between various parts of a company so they don't talk with each other and get insider information and trade on it, and separation of parts of a bank that say have to do with banking versus other aspects, proprietary trading. I fail to see how that would have done anything to prevent the last bubble. I'm in favor of it though because it prevents fraud, and that's what happened. We had all the LIBOR fraud, where the interest rate scandal that was supposed to be set by markets was, you have one department calling up another one, I need LIBOR lower. So guess what? So they manipulated. They reported interest rates to be lower than what they were. That's what happened. And so Glass-Steagall removes that aspect of fraud, but it really wasn't going to do anything to stop the housing bubble. It wasn't going to do anything to stop other things. I certainly am in favor of banks being banks and acting like banks, and not doing all this proprietary lending, proprietary trading, etc. But I don't think it would have prevented the housing bubble.
NAFTA renegotiations. What do you see happening, and should there be any tariffs or duties on the borders of U.S., Canada, and Mexico?
We've already seen one negative consequence of Trump's harassing Mexico over trade, and it came back to haunt him, and media didn't pick up on it. I wrote about it on my blog, but Trump was crowing that Ford had plans to put up a new plant in Mexico, and Trump harassed Ford. Ford canceled those plans and said, we're gonna move that back to Michigan. So lovely. Trump crowed about that. 3 months later, Ford announced, well, we're not really going to build this thing in the U.S. We're going to put it in China instead for the Ford Focus. So instead of this plant being in Mexico, which I actually think would have benefited both the United States and Mexico, instead it's going to be in China. And Mexico is likely to retaliate in some ways against the U.S. because this happened. So the U.S. is a loser and a loser in this deal. And the best thing to do with free trade is to have it. This whole idea that Trump can bully the world and they're not going to retaliate and they're all going to put up with America first, well, we've seen one consequence already. Mexico didn't get a plant from Ford. Instead, China got it. Lovely.
Well, Canada's been slapped with even more softwood tariffs and duties. The American Home Builders Association says that's going to cost 5,000 to 10,000 jobs in the U.S.
Absolutely. No question about it. Another sign of stupidity. Steel tariffs are another one. And the irony with steel tariffs is they're so onerous that even the EU is bitching about Trump's proposed steel tariffs. So, quite amazing, because the EU is nothing more than a customs union. It doesn't support free trade. So it cracked down on Apple, it cracked down on Google. It's the epitome of not wanting, competition. but it's complaining here now that Trump is going even further than what it does. Quite amazing, actually. And I see a potential for global trade wars. I've actually been talking about it for years. But all this stuff is happening right as the Fed is hiking. So we'll see. I mean, we're going to go one step too far in one direction on a number of things all at once, in terms of interest rate hikes, in terms of tariffs, in terms of just, trade policy in general, that is going to cause a global recession, and all these things are going to hit smack at once. The Italian banking system is still insolvent. The ECB did nothing to fix that. And again, here, the global economy is slowing. No problems have been fixed. And, we've blown another bubble, and the Fed is busy hiking away. Quite amazing.
Mish, thank you so much for chatting with us.
Pleasure to be on, Jim.
My guest has been Mike Shedlock, editor of Mish's Global Economic Trend Analysis on mishtalk.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for our guests or for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.